everybody, welcome back to Cignals Trading Academy. This is lesson number 20, and today we are discussing reversals. Today will be the last Cignals Trading Academy for a little bit. We are taking a little semester break, if you will, a little hiatus like we've been alluding to. If you want to see the junior and senior years of the Trading Academy, they will be coming. But leave us a comment down below. Let us know that you guys are eager to see the junior and senior year of the Trading Academy. Let us know also what you'd like to see in the junior and senior year, because we take that stuff very seriously and we check for feedback all the time. So let us know in the comments if you'd like to see the Trading Academy and the junior and senior year of the Trading Academy, and what you'd like covered in those two upcoming playlists. We will be switching gears a little bit for the remainder of the summer, going into the fourth quarter. You doing some lives, additional content, so definitely keep an eye out for that. Those weekly videos will be out starting very shortly, and we will alert everybody via Twitter, YouTube, Discord, and all of the relevant social media platforms that we have about that. So make sure that you have subscribed and turned on notifications so you don't miss any of that. Like this video, leave us some comments down below what you'd like to see in the lives, what you'd like to see in the junior and senior year of the Trading Academy, and we will get to that ASAP as we always do. You didn't miss anything last week. Had a little bit of technical difficulty with the new setup I was using in the office. It made everything sound and look terrible. So got that all righted, and now we are ready to go. So hopping right into it, we are going to discuss the reversal process, which is something that everybody loves to trade, because who wouldn't want to be top and bottom ticking every single trade they make, being the best entry price, getting the best entry price they possibly could, right? And we figured this was a good way to end everything for the time being, considering that we've got over, almost everything you need to know to begin your trading career and using signals. And now it's about trying to find the best entries to trade using the reversal process, which is something that I use quite a bit. So, like I said, everybody wants to trade reversals, but not everybody understands the process of a reversal happening. So, and bear with me, I have really bad allergies today, so I'm going to be probably taking pauses to breathe and get myself in better situation, because it's hard to speak and breathe through your mouth at the same time. So don't roast me, okay? And with that being said, realistically, reversals in thick markets like Bitcoin, the S&P, and the like, they don't tend to really happen at one specific price point, okay? They can happen at a specific price point, at one singular price point, but they tend to happen over multiple prices within a range, right? And a good way to look at this is right here from yesterday. We'll get back to the DOM pretty soon, but what we're looking at here is a good example from yesterday. Prices, when a reversal is happening, tend to be over a fixed timeline, right? Of maybe 1 to 2 to 3 clusters. They don't really happen at one point, and they can, right? Not saying they don't, but more often than not, you're going to see clues leading up to the reversal, and you're going to see a set of very distinct things tend to play out, all right? So here, in this example, we're looking at a long going short, right, from yesterday. As we approached 23.5, we saw on negative delta, we got a big pump up to 23.5. Buyers kind of extended but got trapped, right? On negative delta, we start to reverse off of that top tick pretty viciously. Next cluster, we get a higher point of control, but we start to see a sell imbalance happen at the top of the cluster, a UFA happen at the top of the cluster. And why is that important? Because if you look here, like I said, these things tend to happen over multiple prices and throughout time. This is a 30-minute cluster of Bitcoin USDT, right? So what we're looking at here is, essentially the first clue in this example, buyers just tend to disappear, meaning that you're trying to get back to that top tick, but you just simply can't get there. Notice how close we got here. than the UFA prints. Okay, that's your first sign something's wrong. Especially that this happened on negative 30-minute delta, and price pumped so hard but wicked all the way back. Sell and balance UFA can't get within 20 bucks of the high, or got within 20 bucks of the high. Couldn't take it out. Buyers start to dry up. We get the sell and balance, and then the next cluster. Delta is also another thing. Delta is also increasing, but price is not. Okay, that's very important. Delta is increasing, but price is not after a divergent push higher. Okay, so that's very important. The buyers are drying up, as indicated by this UFA up here, where we're not getting anybody trying to reach for the ask. Okay, we're getting everything done at this level up top, and that's it. Kind of dries up. We get delta increasing, but price isn't. The next candle, all right, next cluster, we get this disgusting wick on the bottom. We get this disgusting little wick up here. UFA again. We start to see the reach again. We can't even get back to this high, let alone this high over here. And we start to reverse pretty heavy VWAP-wise. Delta's now negative again, and we start to peel away. So you're getting absorption up here. Buyers are dissipating as the offer stays steady, right? Sellers are selling to the buyers, making them do business on the ask, and they simply can't press through it, extend. We get everything kind of drying up. The sellers are just sitting firm, waiting for action to keep coming to them in the face of buy pressure, and the buyers simply disappear, okay? And then everything starts to roll. It's difficult to spot where the sellers are just going to pop out of the woodwork and start pressing the bid lower. It's hard to really catch it like at any one specific level. You have to kind of be watching the depth of market a little bit to get an idea of, and we make this easy by showing you the pulling and the stacking of bids and offers, okay? So it's kind of like a bit of feel at first, getting to become familiar with the process of a reversal, but this is a telltale sign that we are drying up. And these trades in thicker markets, like I was saying, in S&P, Bitcoin, they tend to give you a second chance in terms of getting in and out of trades. What does that mean? Well, up here, what we see is buyers try to push the initiative higher, right? And they simply can't get past 23.5. And what happens is we pull back, obviously, right? Now, if you bought this top tick, you are pretty clearly you're wrong. You would know pretty much right away you were wrong, because we started to pull back off that level pretty viciously. The next and if you wanted to short 23.5 and couldn't catch it, again, same thing applies. You usually get that second chance, because what happens here is we try to get back to 23.5, can't do it. So if you're long around here at this point right here, you're saying to yourself, once we get here, delta's increasing, but price isn't, and balance is forming, UFA is forming. Hey, I might be wrong. It's time to stop myself out of this trade real quick, take that $20, $30 a coin loss, move on. Or if you missed the trade up here, you see all these things starting to develop, the buyer's dissipating, delta increasing, price isn't, and the like, as we just went over. You start to think, okay, well, I missed the top tick by 20, 30 bucks, but this is a good place to get in. So you see the absorption kind of happening in real time, but you don't take the trade right away, maybe thinking that because you don't want to fade every single absorption you see. The second you see it, you kind of want to give it a little bit of time to play out and see if maybe buyers will start to continue to press and essentially come, because like if they keep hitting it to this level, right, 23.5, they hit it with size, let's say 100 Bitcoin, 100 Bitcoin, 100 Bitcoin. The more they tap it without sellers staying firm, the more likely they're going to break through it. So it makes sense that we don't necessarily take the most aggressive approach out the gate and try to capture this top tick. Give it a little bit of time to develop. So what happens is here, again, if you did catch it up there, or you did go long at that top, you scratch yourself here, maybe flip short, or if you were just outright looking to get short, now you feel a little bit more comfortable taking it. You can even give it a little bit more time to see if it'll come back. Usually, again, guys, when this is happening, a very good indication is that we'll get close to the top tick of the previous bar or cluster, but we can't quite get there. Buyers will push back, but they won't get back to the original high point. So you see it in succession here. You have the high at 23 and a half, okay? And notice how we still have like a nice little sell wall sitting here, right? Trying to get back to 23 and a half, can't do it. Second time, or excuse me, we get to 23 and a half. Second time, we try to get back to 23 and a half, can't do it. Third time, can't even get back to 23,480. Okay, so it's very clear now the buyers are starting to fade away, absorption is happening, and we get that roll lower. Okay, so those are the things you kind of want to look for in succession, especially when it's happening with increasing delta, but not price overtaking the previous high. And then you get these little imbalances at the top, UFA, the VWAP cross lower, and all that good stuff. So that's something you definitely want to pay attention to. Okay. And another thing you want to be aware of is if this is a reversal that you're looking for at an inflection point, like 23 and a half, let's say, was kind of gatekeeping us from the highs of this move, which were about 24.3 or somewhere in that neighborhood, 24.5. If everybody is watching these levels and knows that this is basically the line in the sand before we either continue much higher or reverse, that's kind of a clue that that there's going to be some game playing happening or trickery at these levels. So you kind of want to let it all play out a little bit, just so you can make sure that you're not getting yourself trapped. Because, for example, if we kind of like I was saying before, if we're able, we want to let the sellers kind of dissipate and we want to let them burn themselves out, because what's happening here is if they keep hitting with size, like we said, it's going to break through eventually. But if we see 100 and market orders just keep coming through at 23 and a half, but price is only ticking up, let's say, 10, 20 bucks, can't really move higher, it's a good indication that these buyers are trapped or they're running out of steam and they're about to dissipate and the market's going to reverse. So if you see size hitting, like market orders hitting with size into the highs and price can't tick any higher, it's a good indication that these buyers are in fact trapped. But you want to be very cognizant of the of just assuming all the time that this is going to be the case, because a lot of time you get guys that are hedging or arbing between futures and spot or whatever. So necessarily, it doesn't really matter to them if they get into this trade at the top tick, because they may be hedging or they may be arbitraging between different markets like spot, futures, across exchanges, whatever. There's a million different ways to go about explaining the nuance here. But they're not necessarily trapped, right? They don't care if the price goes down or not, because essentially they could be unwinding lower one leg of that trade and they're still making money on the other leg. So keep in mind, there is some nuance here. You don't want to necessarily just fade every absorption, every what is perceived as a failure at an inflection point. You want to give it, the aggressive trade would be to take it right away, but you don't necessarily want to be fading all absorption, because again, there could be arbitrage traders, hedgers, and so on and so forth that don't necessarily care. They're not necessarily trapped per se, right? They don't care if price goes up or down at this point, because they could unwind one leg and still be profitable on another. But a good indication is that size is market hitting the this level 100, 50, and it's not ticking up at all. It's just kind of stuck. And you want to give it a second or two, just to kind of play out, see if the market starts to like pull back a little bit from that level, which it clearly did, right? We know that for a fact. So, it's clear as day. We were getting some activity up there. And if we look at the delta, kind of just started to dry up, big size, a little bit more size, and then boop, pulls right back. Okay, so we know that these guys were essentially trapped up here, and that especially it happened on negative delta, that the market was feeding these buyers and essentially were smelling some blood, waiting for them to basically burn themselves out and run out of dry powder. And that's when the sellers kind of came out of the woodwork a little bit, right? So that's something very important to keep in mind as well, that you want to see size hitting the market and you don't really get any reaction. You get kind of that one or two blips higher, maybe a couple of dollars higher from big size, and then essentially the market doesn't move any higher from that point, and those guys are trapped for the most part. So you know that at that point, if they're trapped or not. And that kind of makes it a lot easier to formulate a plan. So you don't necessarily want to just hit into it right away is the point they're trying to make. And one final thing to keep in mind, guys, as we start to see the roll happen, meaning that we're starting to get the actual move happen, is that if you didn't catch anything up here, okay, what'll happen is as we start to roll and reverse course, like the reversal's taking shape, you'll get that you'll get that snapback, and you won't get anywhere near where the level of absorption originally happened as the buying dried up and the sellers stayed firm. Okay. And you'll get a chance to get back, and you probably will not get anywhere near that first level of absorption where the successive lower highs happened and essentially buyers ran out of steam and sellers just popped out of nowhere. But you will get a like a snapback trying to essentially trap people and shake them out of their shorts or whatever the case may be. We don't have to really get into like the ins and outs of that, but there's a number of reasons why this happens. You won't get anywhere near up here most likely, but now your bias is obviously leaning short, so this is not a bad place to get back in. You see it's divergent happening on negative delta. Okay, can't even get past this level of imbalance here. It's funny that we stall right at the imbalance level of the previous cluster, and then we get that slope change VWAP wise and start to pull back lower. Volume is going to be confirming everything. Delta is going to be confirming everything, and essentially the footprint will confirm what you're seeing. So if you look here, obviously big volume across the board. It's all weighted to the sell side, and the delta is negative across the board, even on the snapback rally towards the level of absorption we originally got that capped us in the first place. We stall at the imbalance. This is now because you have the bias. If you didn't get in here, you have a little bit of a better way to take advantage of that. Not far off the highs anyway, and everything is confirming what you're seeing, volume, delta, footprint wise, to give you that confidence to hop in. And sure enough, there we go. Start to roll, big delta, big volume, obviously all weighted towards the sell side. And if we wanted to look at the profile, it's pretty clear as day. The delta profile, pretty clear as day as well, that this is all confirming what we're seeing here. Okay, so that's something to keep in mind. And if you wanted an extra level of confirmation, looking at the depth of market would definitely help as well. You get to see everything kind of unfolding in real time, and not only is it unfolding in real time, but we get to see both sides of the ladder, the bid and the offer. You get to see the pulling and the stacking of orders. So if we see, a bunch of bids being peeled off in real time as offers begin to stack up very heavily, we have the cluster and the depth of market side by side. We see this all kind of confirming what we're thinking in real time and giving us that extra level of confirmation we may need in order to take the trade successfully. So keep all this in mind, guys. We're going to wrap it up here because at this point, if we keep going, we're just going to get into nuance and it will go on forever. So let us know in the comments down below. Do you want to see the the junior and senior year of Cignals Trading Academy? Let us know what you'd like to see. We can definitely get deeper into reversals in the junior and senior year. That won't be a problem. If there's anything else you guys want to see, let us know. Make sure you like this video. Share it with a friend that you think would be, it would be beneficial for them to see it, given that their trading career might be just starting, or maybe they need some extra help and guidance that you think this video would provide to them. Make sure you sign up for Cignals, guys. $19.99 a month for the basic plan. Gives you access to all of our exchanges, all of our time frames, and all of the pairs that we offer as well. Our advanced plan, $79.99 a month, gives you access to the private YouTube, private Discord, advanced features on Cignals, our API, the whole 9 yards. We got a lot of good stuff coming out for that price range pretty soon, so stay tuned. And we're looking forward to seeing you guys on the lives, man. Make sure you get, you turn on the notifications because we're going to be doing live starting most likely next week. and we don't want you to miss anything. So like, subscribe, share, turn on notifications, sign up for Cignals, link in the description, and we will see you guys next time.